All right, let's do it. So why doesn't everyone introduce themselves? I'm Douglas Borthwick. I'm the CMO for INXLimited. I'm calling into this from New York City. Samson?
I'm Samson Mow. I'm the Chief Strategy Officer at Blockstream, the CEO of Pixelmatic, and the creator of Infinite Fleet. I'm calling in from West Coast, Canada.
Nice.
Hi, everybody. I am Arnab Naskar. I am the co-founder and the business lead at STOKR, and I am currently sitting in Hamburg, Germany.
Very good. So we're all around the world here. Now, has anyone heard what's happened over the past week? I don't know if you guys have been watching the news, but GameStop's been in the news, Bitcoin's been in the news, and I think
Dogecoin.
Sure. So we're all retired now from our Dogecoin from the last couple of days. But you know, who wants to pick the mantle up first? I'm not the one to talk about this stuff. Arnab, why don't you tell us what's been going on with GameStop?
Okay, so let's start with the GameStop, right? So GameStop is a very interesting thing. Let me take a different perspective. So here, freedom of expression killed SEC. Let's put it like this way. Very interestingly, what we see right now is on one side, we have the retail investors who are speaking, talking, chatting on Reddit, and they're taking on against the hedge funds who are actually also speaking and talking, but in their own, I would say, networks. And interestingly, what I feel quite interesting over here, for the first time in the history of the stock market, the retail investors have shown such a resilience and such a coordinated effort to just take the Wall Street down and the Wall Street wolves down.
Isn't this technology, though? You know, before this, there was no such thing as people being able to get in a chat together, you know, thousands and thousands of people. You know, if I think about Telegram's pretty new. I think about Reddit as well. It's only now in the last, let's say, 6 months where people have been able to get together and talk to 15,000 other people at once and really create a swarm. And I think it's the technology that's gotten there, because before, you know, the retail guys were just minnows. They were minnows to be eaten up by sharks. And I saw this great thing going around Twitter last night, and it was all these minnows shaped like a shark eating the sharks. And that's what's really happened, is people have figured out how to get together. And look, when I was working at Morgan Stanley, Merrill Lynch, I used to go to idea dinners all the time, and you'd sit down there with 12 other hedge fund guys. We'd all have great ideas. We'd leave them, you know, the odds are everyone would put them on the next day. What this is like a huge dinner. And instead of, you know, $500 million being put on by every hedge fund or every bank, instead you've got $5,000 being put on by hundreds of millions of people. And what's crazy to me is the way that they've been treated or pilloried in the press, in that they're being seen as being, how could you do something like that? I mean, really, if you think about what they've really done, they've done what the hedge fund does. The hedge fund looks at something and says, I see this value, I see that there's a pressure point there, and I'm going to squeeze it. And they've gone out there and they've seen, look, hedge funds are over their skis when it comes down to leverage, and they've sold much more than the float is right now, so they're ripe for an attack. And they've gone in there, and essentially what they've done is, while the hedge fund has shorted a stock, they've come in and shorted the hedge fund. And they've done that by coming in en masse and buying up all of the supply of the stock, so there's no stock available anymore for someone to be able to borrow and sell. And so it's very masterful, but what it really ends up doing is it's going to absolutely destroy the long-short fund. The long-short fund that for a long time has been sitting there saying, no one even notices what we do or what we care what we do. We'll write research reports about how that place is horrible and this place is horrible. Well, now the swarm can get involved and absolutely take them apart.
Yeah, and the most ironic part about that is that the hedge funds have access to those retail trading traders via Robinhood, because Robinhood is selling their data. So it's kind of funny that, you know, they're getting all these data from the little minnows, the little retail guys, but then they still can't do anything. And I think that's a testament to the ability to coordinate now, and people seeing that you can actually accomplish a lot when you have that coordination and you can take down that whale.
Look, 6 months ago, I think, is when we first learned that Robinhood was getting most of their money from selling to someone like Citadel. And at the time, the hedge fund guys were like, what are you going to do about it? What are you going to do about it, right? You're the product. If you don't pay for something, guess what? You're the product. That was like sort of the mantra that was going around, and tough luck. Well, it looks like that sort of attitude is going to kind of come around and sort of bit people a little bit in the backside, because suddenly, yeah, it is tough luck, and there's no tears. And what I find interesting is there's no tears in Bitcoin, But apparently there's a lot of tiers in equities. Because in Bitcoin, we don't shut things down. Things don't happen because it's moved 20%. Oh no, it's a disaster. Instead, this thing can go down and collapse and it comes back up again. You know, it's like that song, I get knocked down and then I'm up again and I have another lager drink. And that's Bitcoin. Doesn't matter how many times you hit it down, it's going to come right back up again.
Well, to be fair, Coinbase will shut it down every so often when there's a big spike in volatility.
That's true, but that's why there's other exchanges coming into the market with perhaps better technology, like INX. There's my plug.
Yeah, there's your plug.
But I think the most interesting perspective over here, like in the Bitcoin, you can be your own custodian, right? Which in normally stocks you cannot be, right? You require as custodians, you require kind of brokers. When I'm buying an Apple share sitting in Germany, I'm actually not buying it directly in Apple share, right? I'm actually buying some kind of depository receipts. So that's why, like, at the end of the day, you're not holding your own shares as a custodian. You're relying on some custodians, you're relying on some CSDs and other intermediaries in the process. And that creates a huge chain that if one chain falls apart, you're fucked up.
Well, you know, I had a discussion about this week where someone said to me, why is this USDC paying you 10%? And I said, what do you mean? He said, you know, if you had money in the bank, it gives you a quarter. I said, well, look, the bank takes that money and it lends it out. And they make 10%, but they don't pass it back to you. They say, oh, we can only give you a quarter. And the same thing, but with stocks, when I own stocks, I have a portfolio with stocks at Morgan Stanley. Morgan Stanley doesn't say, you know what, we've been lending these out overnight. Here's some money for that. They keep the money themselves. Because as you said, I don't own the stocks. I just own the rights to the stocks. And so there's a lot of services that banks and investment banks and brokerages have gotten away with for a long time that aren't passed directly back to the owner. Whereas in crypto world, those things are passed back to the owner. And we look at it and think, wow, that's crazy. I can't believe I'm getting yield for having Bitcoin, or I'm getting yield for owning USDC. You would get yield for owning the dollar if the banks actually were more transparent and said, well, actually, you know, you're lending me the dollars at a quarter. I'm lending them out in my credit cards at 15%, but why am I not getting back that 15%? In crypto world, you are getting it back. And I think
we should probably take a step back and explain. It's like the three of us are kind of in the security token business, right? So INX is a security token. Infinite Fleet is doing the EXO security token, and Arnab is with STOKR, which is the platform for issuing securities too. So, like, I think part of this discussion is how does this fix the legacy financial system and how it's looked over?
Well, one thing about security tokens is they all come back to the same regulator, and that's the SEC. So that's sort of one thing that's very similar between the new way of doing things and the legacy world. But what is different is the fact that, yes, you actually own your security. When you buy a security token, you own it. You're not buying it, holding it somewhere who's then lending it out for someone to go short. Instead, you own it and you keep it, and you can put it in your Moo wallet. You can keep it over at your custodian. You can keep it over at Anchorage right now, the first ever qualified custodian. Or you could keep it in BitGo. There's so many different places now, custodians that you can keep it at, but they're not lending them out, not yet. But at the same time, you can take it and you can put it on your zip drive and you can walk away with it. And I think that that's something very unique to security tokens. Another thing that's very unique to security tokens, certainly in the United States, is the fact that there's smart contracts now being enabled on them. And ours is one of these where I can't pass a security token from my Moo wallet over to Samson's unless Samson has also been gone through a whitelist. And that's cutting down huge on KYC AML. And you know, I had a discussion yesterday with a reporter from Al Jazeera, and he was saying, yes, but you know, crypto is all about it's being used for nefarious means. I said, and what do you mean? He says, you know, drugs. I said, look, Chainalysis has done many, many studies in this, and they say that maybe 1% is used for that sort of thing. Now, let me ask you a question. Go downstairs in your neighborhood, go to the guy in the corner and ask for some marijuana. What are you paying in? Are you paying in Bitcoin? No, you're not. You're paying in dollars. And if someone gets kidnapped, what are you paying? You pay in dollars. If there's ever some sort of theft or fraud in the United States, what is it based on? It's based on dollars. So this idea, you know, what's the other rumor that when you have a $100 bill, every $100 bill in America has cocaine on it?
I think all all $100 bills have cocaine on it. Amounts.
Right. I mean, I don't think it's on Bitcoin. But what I'm saying is that, of course, the dollar is used for many more nefarious means than crypto. And the great thing about crypto, thanks to guys like Chainalysis, is that you can actually go in there now and you can trace back the holder of that crypto. You know, there is that sort of line of who has owned it before you, and before you, and before you. And
well,
that's why
it's not even Chainalysis. It's all transparent because it's on the blockchain, and you know, it's not as easy to do nefarious things when everything is on a public ledger. And I think that's the key point. Not that there are those companies surveilling it, but the fact that it is by default open.
right. Everyone knows what everyone's doing all the time.
I think that's actually like very interesting is you're making it accountable, right? What happens inside those CSDs, what happens inside those broker houses, you can't see that. But what happens on a security token, you can see it, you can audit it. And you know who was accountable for that. And you can really make that person liable, right?
I like about security tokens as well the fact that we don't close. We're open 24 hours, 7 days a week. I can't drop a really crappy PR at 4 o'clock on a Friday and giggle about it over the weekend, because guess what? People are locked out of trading this product until Monday at 9:30 in the morning. And to me, that's the craziest thing I've ever heard. And yet we're programmed to believe, well, that's normal. But it's not normal. In the currency world, we trade 24 hours a day, 5 days a week, but it's moving to 7. Crypto, you trade 7 days a week, 365 days a year. It's equities that opens up at 9, closes at 4:30. And think about that. That's about 7.5 hours a day. That's ridiculous. Especially if the US says that we're the global center for finance, and yet everywhere else in the world is asleep when the US market is open. With security tokens, we're open 24 hours a day, 365 days a year, and there's fractional ownership. Now, on an ESG basis, think about this. There are folks sitting there in the third world that can't afford to buy an Amazon stock. But you know what? If it was digitized and it was trading on the blockchain, they could buy a fraction of it. And they could have a portfolio. They could have just like my son, who's 18 years old, he's got a portfolio of something like 30 stocks on Robinhood, all fractional ownership. You can have the same thing, but you can do it easily with security tokens. And people all around the world can get access to public and private markets through security tokens all the time. And that is mind-blowing.
I think that's okay, but you're still trading on a centralized platform. And I think the bigger revolution with security tokens is like what we touched on earlier, which is you can self-custody, you can keep it yourself. So for the EXO token, it's issued from the publishing entity of Infinite Fleet. So it's direct from the company. A lot of the anger right now is directed at Robinhood because they're selling your shares for you for your own good. And there's nothing you can do about it. It's a centralized platform. They could lock you out if they wanted to. But for security tokens, it's direct from the issuer, and there is a whitelist or smart contract for your case, right? Mm-hmm. And this means it's tradable peer-to-peer amongst people that hold it. Because you self-custody, no one else can stop you from trading it. It might get listed on Robinhood, but then you can also take it out of Robinhood, trade it peer-to-peer. It's portable between different exchanges. There is a rail behind it, so you can move it off of Robinhood onto INX, and I don't think INX is going to say, we're freezing you out for our hedge buddies.
And if we did, then they could just do peer-to-peer.
Yeah, exactly.
As long as the other person has gone through the whitelisting process and their Ethereum wallet has also been whitelisted, then they can sell it to them. So you can't get shut out. It is crazy that you can be sitting there and you've got all this money and all these stocks at Robinhood or Ameritrade, wherever folks had their money. And then you're being told, oh, I'm sorry, you can't do anything with it. You can only sell it or only buy it. Are you crazy?
Or Blockstream Green Wallet.
A retail person now should have a little light that sits at the front saying, it's okay, the hedge funds are the opposite direction from you, now you can trade. Because that's the kind of the rule that they set up this time. They kind of said to you, you know what, if you're retail, you're second class citizens, and you really only can do positions and trades based on how the hedge funds are going to make money. And that's just absolutely shocking. For the first time yesterday, I agreed with AOC. It's like hell froze over. Two things happened yesterday that were crazy. AOC, I actually agreed with her for the first time. And we then had Tesla coming out saying he loves Bitcoin. And so it's like, yesterday was crazy.
The thing is, like any big public companies should be afraid right now also, because thing is that you have these platforms like Robinhood, which definitely provided this. You cannot call it Robinhood anymore, right? It's Sheriff at this point of time. And interesting aspect that what Robinhood really promoted, that you are giving accessibility, is a lie, right? Because they can close anytime they want at any given time. They don't have to give any, any reasons. Hedge funds can trade the same stocks inside Robinhood, but not retail investors. Fantastic, right? And that's what I think the very interesting part of security token comes is the investors create a direct relationship with the company. Because when you are having, let's say, for example, in case of Infinite Fleet, when you have the EXO EU token in your green wallet, you immediately create a connection with the company. You don't have a relation with the STOKR when we are issuing, right? Because we are just an interface. At the end of the day, the relationship is on the blockchain layer between the company and the investor.
But look, we're doing our IPO right now. And one of the craziest things that we like, are you guys getting this feedback from me?
A little bit.
One of the things I like the most.
You're muted, Douglas.
Now you're muted.
Now you're muted.
How about now?
That was good.
Yes. Now
So one of the things that I like the most is that, number one, we know our cap table. We can see exactly who owns which token of ours at any time of day. Any time of day. And at the same time, if we have to pay a distribution, we pay it directly into their wallet, and we can pay them in Ethereum or in dollars. And that is also mind-blowing. So I don't have to deal with the middleman. I don't have to deal with the banks. I don't have to have a bank, have $100 dividend, and by the time it gets to my token holder, it'd be $96. We don't have to deal with that anymore. And don't get me started on banks. Let's just take a little side S here. The bank, the average person takes out $40 from their bank account when they use their ATM card. They pay a $2 fee. A $2 fee on $40 is a 5% fee every time they take it. So the bank gives them 0.25% to keep their money there. And every time they take it out, they get charged 5%, but they don't realize it because it's become part of their daily life. That's why Bitcoin, that's why USDC, that's why all of the infrastructure that we're building right now is absolutely the future.
Well, if you want cheaper fees for users, you should hurry up and issue INX on Liquid.
Look, Liquid, and this has been a debate we've had for quite some time. Liquid was not around in 2017, early 2017, as Samson was, because Samson is with INX as one of our advisors. But I'm sure that we would have gone Liquid if it was around at the time. You guys were just too slow to the game.
It's coming. Just wait.
But what we can do is we can pick up our locomotive, our ERC20 token. We can pick it up off of Ethereum, and we could move it over, and we could put it down on your rails. And because that's the nice thing about always knowing who owns your token and how many tokens they own and where they are.
Mm-hmm. Yeah, I mean, it's a security.
The gas fees will kill the investors anyways.
Well, they will. People used to say that about currencies, and you'd have 5,000 trades happening in a second, and people said, "Oh my goodness, it's getting so expensive." But you find a way whereby you can capture them all at once and then send them out together. And so I think that what you'll find is technology will make gas fees go down somewhat. But for sure, look, the more that Ethereum is going to be used for stable coins, and I don't know if you saw this, the OCC, Office of Controller and Currency, came out about 2 weeks ago. And they said that they want banks to stop doing SWIFT trades, stop doing ACH for wire transfers, and start using stable coins. Now, stable coins are mostly running right now on the Ethereum network. And if that's the case, gas fees will go through the roof.
That's why they're going to use Liquid.
And then we'll all move to Liquid.
Yes, like you cannot avoid the stable coins right now. Even on STOKR, we see the number of users investing using stable coins are fascinating, right? Like people even, you can consider that the people at the age of 40, 50, they will not come with stable coins in Europe. They will invest with Euro, but surprisingly, they're investing with stable coins.
Well, the stable coin, the question is, why would you keep a couple of $100,000 sitting at a bank, or even a couple of $100 sitting at a bank, earning nothing, when you could stick it in there, earn 10% in USDC, and then when you want to send it to someone, I want to send Samson some money because I bought one of his great hats that he always comes out with. I can send him some USDC, and the wire I'd be paying $25 on the USDC. I pay next to nothing. I mean, it's sort of like it doesn't make sense to use a bank anymore in the way that people traditionally did, which was to keep their dollars there. Because every time, as we said, every time you take them out, you're getting absolutely hosed.
Well, I think there's a great deal of utility in stablecoins. That's why the market is so booming. That's why Tether is $25 billion now. And there's a great deal of utility also in security tokens, because you can self-custody, you can trade them peer-to-peer. You remember when INX first did their IPO announcement, a lot of your advisors and investors that are Bitcoiners got a lot of flack because of Bitcoiners saying, why not just buy Bitcoin? Why do security? Well, securities are a multi-trillion dollar market, right? They're not going away anytime soon.
It's more than that. So right now, what are we looking at? Maybe a $700 billion valuation right now for crypto, all the crypto products.
Yeah,
you're looking at about maybe a couple of $100 trillion for the trading of equities. That's just equities. You're looking at quadrillion dollars a year that's done in wire transfers. And then you've got all of the fixed income universe as well, and all the currency universe as well. And you look at USDC and you look at what that market cap is right now, or Tether, they're de minimis compared to the amount of dollars that are out there. Then you got all the yen out there, you got all the yuan out there. There are so many different currencies that once they go digital, forget about the traditional model of people trading FX in Asia where they're trading dollar yen. They'll be trading the stable coins. And these stable coins are going to be so much better for trading than what people have right now.
Mm-hmm. Yeah. But going back to the securities, there's a great deal of utility in a security token. It changes the paradigm a lot, and it helps eliminate that corruption. So as Arnab was saying, there is a direct connection between the issuing company, and the investor. So imagine GameStop was a security token. They would issue it directly to those guys. And if Robinhood said, no, we're not going to let you trade, they'd be like, screw you. We're not going to cut that relationship. They want to invest, and they can invest. There should be nothing stopping them from investing.
And also one thing, when you have it's a very interesting thing. When you have a stable coin and you have a digitalized securities, you can do the delivery versus payment on chain, right? So that means that normally how much settlement takes is T plus 3 days usually, right? The T plus 3 is a normal standard. Usually it should not take so much time, right? It takes because there are so many middlemen that everybody has to manage their Excel sheet, which is maybe on any server, you don't know it. And these Excel sheets need to be updated for each and every trade.
Yeah.
And with DVP, you can do with one settlement and everything is done.
T plus 2 is almost harking back to the days where a guy would get it and then walk it across the street or walk it up to Boston and drop it off there. It's absolutely shocking. We don't even take delivery of packages in T plus 2 anymore. We want next day delivery. And this is an Amazon generation. If you think about the guys that are on Reddit right now, this is the generation that's grown up on Amazon that wants delivery tomorrow, next day, that doesn't understand why markets are closing. That when Charles Schwab did a study that said of the top five holdings of their equities is GBTC. This is a generation that's into digital, that understands digital, that wants next day delivery, and equities don't deliver in that respect. And this is a generation that's about to have the largest ever wealth transfer in history as it goes from the boomers down to the millennial generation. And these guys aren't going to have time for a stock if it doesn't open 24 hours a day, 7 days a week. I mean, we can go in the woods in terms of security tokens and how great they are. But the first thing that anyone notices about a security token is, holy crap, this thing trades 24 hours a day, 7 days a week. And I think that that's sort of the biggest mind blower, because as soon as I know myself, as soon as I start talking about an electronic wallet to somebody, their eyes just start glazing over. Now, it's exciting for us to talk about, but it's not for the general public today. They get excited by 24 hours a day, 7 days a week. Regulators get excited about the fact that there's built-in AML KYC. Issuers get excited about the fact they don't have all these middlemen to pay. And so, if doing an IPO in the blockchain going forward is going to be very, very cheap relative to the way it was before. You've already seen how Coinbase says they're now going to do this self-issuance, self-IPO. Well, you can do that on the blockchain today. We did it. Now it's not, we didn't do it the easy way. We did it the hard way because we were the first. But it certainly is a way for people to do it. And you can do that as a private company or as a public company. And that's one of the great things about security tokens too. You can have a public company that's worth $5 million, $100 million, $300 million, and you can tokenize it and put it on the blockchain and allow people to trade it. Now, certainly for some issues like a Reg D, it's going to be locked up. For others, you may have to be an accredited investor. If you do it the way we did it, you could be retail or an accredited investor.
Mm-hmm.
You know,
There's
like
also
an interest. Go ahead, Samson.
You go.
So interestingly, in Europe, you don't have to lock up, right? So interestingly, in Europe, you can do on the next day. So yeah,
that's true, but I don't think we can take that European one yet and bring it over to the US unless we wrap it somehow as a US token. But for sure, I would guess in the next 3 or 4 months, I'll have figured out how to wrap any token and list it on our exchange.
Well,
that's good for us.
For Infinite Fleet, we're working on our Reg A filing, but the idea is that the company Exordium can move the token, the Euro token and the US token between the two markets. At least that's what our legal counsel has been saying that we can do. So that's possible too, or you could wrap it in some way. But there's a lot of interesting ways to bridge markets, and the technology is also very interesting for the dynamic it changes. Like eliminating the middleman eliminates a lot of that collusion and corruption that people are seeing. And then I don't think anyone is going to stand for that anymore. It's just the veil has been lifted. They've been red pilled or orange pilled, and it's over.
You know, there's a way as well where you don't have to wrap the token. What you do instead is you filter out the users. So, you know, once we're up and running, maybe we've got a couple of million guys that are looking at security tokens, and we can filter them. Some are accredited investors from Europe. Some are accredited investors from the UK. Some are retail from the US or whatever. And based upon how someone's gone through the KYC AML, we'll be able to lead them into the security tokens they can trade.
Yeah.
And so in that way, it's not necessarily the wrapping of the token that's going to happen. It's the way that we essentially segregate different members so they can all trade crypto together. But then when it comes to the security token side, maybe the US guy will only see US ones that he can trade in or she can trade in. The European guy can only see the ones that they can trade in. And that's one of the exciting things about this space. I don't know about you guys, but every day in this space, I'm having phone calls with really interesting people setting up really incredible deals. And it blows away the legacy space that I've come from.
Yeah. There's also a bridge aspect here too. So security tokens can trade on traditional markets as well as, you know, crypto markets and peer-to-peer. So Arnab, the EXO EU token has an ISIN, right? So it can be traded on traditional brick and mortar European exchanges, correct?
It's one step closer. Yeah, I would say.
Well, we've got all the right stuff as well. We're a full publicly traded company in the US, but when you go to New York Stock Exchange and NASDAQ, they say they're not ready yet for digital tokens. Now, to me, that's a blessing. That's a great thing. Because, you know, in 2012, Elon Musk went to the top 4 automakers and he said, look, I'm talking about electric cars. You know what they said? They said, yeah, don't worry, son, we'll catch up with you in a couple of years. And the reason they couldn't do it is because they spent around 8% of their revenues at the time, the big 4, on paying off their pension funds. The pension funds were crazy. Anyway, they all ended up going bankrupt. Now they can't catch up to Elon Musk. And the US financial institution is very similar. We went around saying digital is the next thing. And everyone says, yeah, you're right. It absolutely is. I said, well, you know, do you want to get involved? And they said, you know, don't worry, we'll catch up with you later. But the reason is because they spend around 8% of their revenues right now paying for stuff like ATMs that are run by Cobalt and Fortran. You know, the technology that's running the banks right now is so old and decrepit, and yet they have to keep it up because it's being used so much by so many different areas of the banks that they can't just turn around and make it new. And that's why fintechs in the end is going to win, because we don't have that heavy yoke around our neck. Now, sure, the fintech that we're building today, the code we're building today, in 50 years' time, may be old and decrepit, and hopefully we'll all keep it up again. But right now, the banks really are weighed down with a huge set of costs that they can't change overnight. Whereas guys like us can change the code and move things around overnight on a whim.
Did you guys see the news in South Africa? The government released a fork of a browser that has Flash enabled because it was easier to do that than to update their online forms to not use Flash.
Amazing. It's amazing.
I think one interesting thing also for this week, which really interesting, like to watch actually, is you have on one side the entire retail markets, right? These retail guys are mostly considered, you know, these guys cannot move or shake a market. But interestingly, these retail guys first targeted some of the gaming companies, right? So that means they have definite affiliation towards the games. And that's, I think, somewhere the hedge funds forgot to consider in their risk management that gamers coordinate digitally much more faster than normal traders. And the Reddit it's an interesting platform to use that, where you cannot say you are hiding something and doing it. It's all open. It was all like, if you see the freedom of expression, that's what I started. It's like that's the ultimate human rights, right? Freedom of expression. And now the hedge funds are asking that impose more regulation on the retail guys so they cannot trade.
I wonder though whether GameStop was picked because it's a gamer stock, or because when you looked at the data, it was quite obvious that the hedge funds were over their skis. There was like 140, percent.
180.
100 and what? 80?
I think it's 180. It's like a really high, 160 or something.
It's a ridiculous amount that was sold short relative to the float. And so, if you're going to go after something, you go after the one thing where you know that they can't handle it. And they were just over their skis in such a way that it was quite simple to be able to turn it around. I think you probably had 20 to 40 people that said, this is a great idea. And then everyone started saying, oh my, and people jumped on it for different reasons. Maybe they did it because they thought it'd be profitable. Other people liked it because they thought they were screwing over the hedge funds. Other people came in and said, you know what, this is us versus them. And soon it becomes a movement. And I think that that's what happened. I think that the original people just said, you know what, this is a good idea. Let's put it on. Let's try to spread it around because of the technicals on it.
Well,
and
it is a kind of movement.
Story.
If you look at it, the GameStop Wallstreetbets thing is a microcosm of what Bitcoin is. They're screwing the hedge funds, and then Bitcoiners are screwing the central banks. So it's directly related. There is some connection here.
I think there's a connection for sure, but I don't think that that's where it was coming from. Now, when you see what happened today, when Elon Musk decided to put the flag up with Bitcoin, that was another sort of mind-blowing moment as well. And you saw Bitcoin go from 33,000 to 38,000 in a couple of minutes. I was sleeping at the time, but I remember waking up and looking at it, that something must be wrong. But that was an astounding move too. And now you're seeing, big celebrity that has wealth that is saying Bitcoin is the way forward. And you're having more and more people. I don't know about you guys, but I must have talked to a couple of hundred people in the last week that wanted to open up accounts somewhere. Unfortunately, INX opens up in a couple of months, but they've all asked me where can we open up accounts? We want to buy Bitcoin, and it's an absolutely astounding thing because one thing about Elon's followers is that it doesn't matter whether he's positive on something, negative on something. What he does, they want, and it's like the guy that buys the Apple products. Every time Apple comes up with a new product, doesn't matter if the screen breaks every 3 weeks, everyone wants it because it's the coolest thing. And so now you're getting these early adopters that are getting involved too. You got the Tesla guys. I don't know. I'm still waiting for the guy that runs Apple to come out and says he likes Bitcoin too. But after a while, we're going to find out that everyone likes Bitcoin. And as Samson's been saying, ever since Bitcoin came into existence, people are going to be sitting there saying, no one ever told me about it.
Tim Cook, by the way. But I think the next step for Elon is to put some of Tesla and SpaceX's corporate treasury into Bitcoin and then tokenize the stock, do a security token.
I like the idea of him putting a node up in space.
Only geosynchronous will do, though.
But I mean, it really has been mind-blowing this week in terms of the news flow and where things are going. And if you looked at today, all the reports coming from every single exchange, where they were all talking about how they were having mind-blowing amounts of people coming in to sign up. And I think that's
some of them were down, and some of them were down, right?
Some of them went down, yeah, for sure. Well, some of them always go down whenever the price rises too much. And
some specific ones that always goes down.
That's
right.
right.
And it will go down.
Right?
I'm not going to point fingers. Samsung probably will.
It's Coinbase.
It's Coinbase, yeah, that's true.
They always go down whenever you want to do something.
Yeah. But back to the other point, like Robinhood stopped trading other stocks too, not just GME and GameStop, right? They said like anything that people are talking about on the forums
Hold on,
is not allowed to be traded.
I'll be right back. Hold on.
Yeah. But the other things that they're preventing are just things that people are talking about, and that's pretty nasty, Like it just means like they don't want anyone to discuss anything. It's just like trade in your isolated bubbles, but the hedge funds can have the ID dinners and coordinate accordingly or bail each other out. But no, God forbid the retail guys talk.
Yeah, I think like this is something like it's a very vulture kind of attitude, I would say, over here. It's a very predatory attitude. Like it's not the thing that the regulators should support, but the way the regulators are reacting, and this is something not the right way. And this is something like that's the same thing you saw in Germany also right now with the entire Wirecard saga. I don't know whether you guys are following. Recently, the BaFin, the head, is stepping down, and he should have stepped down long back. It is a moral responsibility. If you failed, like Wirecard was a regulated company, and still you couldn't find that, and short sellers found out in that case. So that's an interesting, right? Short sellers are not always wrong, right? In some cases, like for Wirecard, they found out, and it was the regulators who found out late. In US, it was different. So definitely short sellers are required to somewhere check the market and see the reality. It's important. But what the hedge funds did for smaller companies in this time of COVID, that was quite predatory. Like that's not the right way you do in the market.
Yeah.
I think that yesterday is going to go down in history the same way that when George Soros brought down the Bank of England. And George sat there and it was a David and Goliath moment because George at the time wasn't a Goliath. He was a David. And the Bank of England was seen as, this steely place that you couldn't go against. And I think hedge funds, traditionally, when someone says, yeah, I'm managing 15 billion, you think, okay, I can't really go up against you. But what happened here is you had a lot of kids get together and suddenly become their own George Soros. And they took down, not a Bank of England, but they took down a bunch of hedge funds. And to them, that does become a movement. It does become, and then what happened afterwards is the part that has cemented this movement. And that is that, essentially regulators or exchanges picked a side. And the side they picked wasn't on the side of youth. It was on the side of experience in the way that they looked at it. I was on a show yesterday on Varney, and there he was talking about how these were children walking into the casino or something like that. And I said, look, they're not going into a casino. This is the youth. This is the future traders of tomorrow, and you can't talk about them like that.
Well, here's the other thing. Like the hedge funds, they're all very experienced guys, but then they get wrecked and they lose billions and billions of dollars. It kind of puts into question, like, what does accredited mean? It just means you have money. It doesn't mean that you have brain cells. So the whole concept of gatekeeping people from investing has to go out the window. And I think that process is starting, but it needs to accelerate because some guy sitting on the 40th, 50th floor does not mean he's smarter or better than some guy sitting at home trading on his app.
That's certainly true. Yeah. And I think that though, that accredited investor status is there because the wealthy person can afford a loss. And I think that's traditionally how the SEC.
So what about gambling, Douglas?
Well, okay, I guess
gamble as much as you want.
And I do find that interesting. When you buy a lottery ticket, you don't have to be an accredited investor.
Yes.
But if you buy and you go into an early stage company and you join the private equity type area, you have to be accredited investor. So okay, so there's only things where you don't have a single chance of winning that you're allowed to buy, and something you have a chance of winning in, that's only reserved for the rich guy, and that's just inherently wrong. It's inherently wrong. And I was surprised yesterday when I agreed with AOC when she came out and said, what's happening here is ridiculous, because for the first time I agree with her. And I said it is ridiculous that people shouldn't be treated in this way, and exchanges can't pick and choose who they want to serve. I'm sorry, you can only buy if you're a hedge fund, you can only sell if you're retail. That sort of thing is inherently wrong. And this is in America.
Yeah. Well, the best headline was like, we need to let the hedge funds recalibrate to combat the Redditors. And they're basically just saying it now. They're not even trying to be subtle about it. They're basically saying, screw you guys.
We don't want retail to lose money. Retail wasn't losing money. Retail was the one that was making money. And the SEC is there for the investor, the investors, not necessarily for the wealthy investors, but for all. And so I think that they should make some sort of comment that says, you know what, guys, this was wrong. And obviously there'd be a big fine. It's a tough thing to do ahead of your IPO for sure. But I think that the damage has already been done. I had calls last night from my son's 18-year-old friends. They're all like, look, should we move our money out of Robinhood? We're thinking, well, we're long Bitcoin in Robinhood. I said, well, actually, no, you're not. You've got a position, but you don't actually own the Bitcoin. We want to move it to Coinbase. I said, well, that'll probably be shut down. That would be closed tomorrow too.
Well, there was some news that Coinbase was going to limit some trading as well. I didn't get to read the article, but it was sent out and circulating. So ultimately, the lesson here is not your keys, not your coins, not your security tokens, not your securities. So there's a lesson here that people are learning, and I think it's better that they learn it the hard way, because that's the best lesson, actually experiencing it yourself, getting locked out, getting your PayPal account shut down or whatever. Then you understand it, and that lesson stays with you.
For sure. Yeah, nothing teaches you more than pain.
And actually, interestingly, from Germany, I can mention the same thing that Robinhood did. There is a company also over here called Trade Republic. They also did the same thing. And this is a very interesting pattern. Like all over the world, all these major neo brokers, as they call themselves, they all have restricted similar kind of stocks. And it's a very coordinated approach. It cannot be done, just by, one CEO like Vlad thinks, okay, in order to save the interest of some of my customers, let me close it. And how can Trade Republic is closing it? There is definitely a very deep, and I think that need to be really investigated. Like, what was the real reason?
Well, you can look at that, but then you could also look at the coordination when, like, Trump was thrown off of Twitter and suddenly was thrown off of 4 or 5 other social platforms. This idea that there's not sort of folks at the top all talking to each other and coordinating seems a little bit fool me once, fool me twice. It's sort of like, after a while, we just start to realize that actually, we're not in control. We're not the guy behind the curtain. And that needs to be given back to the people. And that's the one thing I think that crypto does, is it takes the power and gives it back to the people. Viva la revolution, because the reality is it's the people that make a market. You can't have a market with just 2 hedge funds, one against the other. You need the people involved, and you can't be screwing over the people every single day.
Yeah, it's going to change.
I was just thinking about like what Samson mentioned, not your security tokens, not your stocks. I think we can say also like that, not your custody, not your stocks, right? So the same at the end of it, Bitcoin is also custody, right?
Well, a lot of people don't understand this, but when you do own equities, you can say to your company, you can go to Morgan Stanley and say, look, I don't want this. I want this to be segregated. But whoever does that? It's sort of like having that, when something's put in default, the average person doesn't read all of the small print and think, okay, maybe I could do this instead. Because you can actually do that. You could actually I believe you get your equity in paper form. You can hold it in your basement, but no one does that. Why would you?
Because it's too cumbersome. Like if it is tokenized and it is tradable on a blockchain, preferably on liquid sidechain, then people will do it. Like people registering on STOKR right now are getting their XO tokens into their green wallets, and they're posting screenshots and saying, hey, I have my security token here. It's really cool.
Yeah. And I think that people right now, they look at a digital wallet and they think, oh, that's an inconvenience, but they don't understand why it's actually a convenience, because they've been taught for so long that what's convenient is Morgan Stanley, Goldman Sachs holding your stock for you. It's not in your name, but then they can borrow it out and they can make lots of money doing that. But you're taught that that's convenient for you. Really, it's convenient for them to make money.
Well, if you look at Bitcoin too, people say, oh, it's really hard to run a node and use these addresses. But if you've ever done a bank wire, it's far easier to do a Bitcoin transaction than to do a bank wire. And if your wire goes south, you have to call the bank and you're on hold for an hour. Like, it is easier, but people just have to make that mental leap to understand, like, it's much different, but it's different in a good way.
Yeah. Well, Bitcoin as well. I think that when it was first talked about, people did talk about it as a payment. And I think that using it as a payment was only good for the guy that was getting paid. I think that Bitcoin is much, much more interesting as a store of value. And I think of it as being that life vest that you're thrown when the water's going all around you and you need to grab onto something because everything else is sinking below you. And I look at the number of dollars that have been printed, number of sterling that have been printed, yen printed, all for just for COVID. So the last 6 months, 30% of the US dollar supply has been created.
Yeah.
You need something to hold on to and keep your wealth above the water because everything else is sinking around you. It's
the same in Canada. They're printing money like crazy. But I think Bitcoin can be for payment too, using the Lightning Network, using side chains. It's just, it's way more valuable as a store of value now than to spend. Like, why would you want to spend something that is your life vest. You know, people will do it, but ultimately that is the primary driver at this moment in time, just because of the macroeconomic situation.
I'll tell you, I think the best use for Bitcoin is for paying your kids' education. Think about it like this. If you'd put aside your $30,000 to pay your kids' education 10 years ago, you'd be buying the university today. The cost of education for your children is collapsing in Bitcoin terms, and it's going up ridiculously in dollar terms. And I've got a kid about to go to college now, and I got to tell you, I'm happy I bought Bitcoin when I did, because for me, the cost of that education has been collapsing. But there's other folks, and that cost has been going up and up and up and up, and they're worried. Now, if the 529 plan could start allowing you to buy Bitcoin, we wouldn't have to worry about rising costs in college anymore.
Yeah.
How about we change that rule?
Okay, guys, I need to run actually to another meeting. So
We've done 49 minutes.
Say again?
We've only done this for 49 minutes.
How long do you want to go for? An hour?
This is good. Listen, thank you very much, everyone. Next time we do this, we're going to be a little bit more organized, and I won't have Alan Silbert delivering me a computer halfway through the discussion.
Yeah, just blame Alan. It's always Alan's fault.
Right.
He was not responding, right? Thank you.
Cheers.
Okay, thanks, guys. Bye.